This is Jorge Gonoza, CEO of Fortuna Silver Mines. They're a mid-tier gold and silver producer. Jorge has mines in Mexico, Argentina, Peru, Burkina Faso, Cote d'Ivoire, and an exciting new advanced stage exploration project in Senegal. Jorge, welcome to Ron's Basement.
No, Ron, a pleasure to join you once again in the basement. How about these markets, huh?
Oh man, it's teaching us how to be thick-skinned and tough, right? It's
I was at the Colorado Springs Golf Forum. No, it's the golf forum, and I was meeting. It was overall, I think, a very quiet conference. It's probably the most important conference for precious metals in the world. But it was very quiet, very quiet. Having said that, we had a full schedule. No, we did have a full schedule, and within the 25, 26 meetings we had over 2 days, 2 days and a half, I had a very interesting one. I was talking with a portfolio manager in a large UK-based fund. And this fund manages about 25 billion sterling. Billion, right? 25 billion. And he manages the gold portfolio within the fund, right?
Yeah.
So according to the overall strategy, they give him money or take away money, but it's not like outside money. No, it's money they get and they allocate within those 25 billion. So he tells me that 2 years ago, he was managing $2 billion in mining equities, in precious metals mining equities. Now he's managing only $500 million.
Yeah.
So he went from 2 billion to $500 million. So he's managing a quarter of what he was managing now. And when I ask him, what do you think is happening? Because there is no appetite for the mining equities, and gold still trading close to nominal record highs. Yes, the miners' margins have been squeezed by inflation dramatically, but still gold is close to nominal highs. So why so much apathy with the mining equities? And his answer made a lot of sense to me. He said the gold price, they believe, is supported by central bank purchases, not by big allocations of capital, of portfolio managers, right? So he thinks the nominal, this high price around 1900, 1800, if you will, 1800 is still a high price in nominal terms. He believes all of that is being supported by central bank purchases. And the issue is that usually when you have, money managers allocating capital to gold, they also buy mining equities. But central banks, when they buy gold, they don't buy mining equities. They just buy gold. So that's why the discrepancy between gold, where gold is, and the valuations of the mining equities. Because again, the central banks will purchase gold, but will not buy mining equities, right? They will not buy Barrick, Fortuna or Agnico Eagle, right? And they won't. That made a lot of sense to me.
A favor and check out Pinbacks, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pinbacks is best, and you will too. And be sure to tell them that you're from Ron's Basement. And if you think about it, and I know also the other statistics are showing that ETFs, the big BlackRock ETFs, the GLD and the SLV, they both have had pretty significant outflows over the last couple of years. So, right, from in terms of anything outside of central bank purchases, it appears that there's been money obviously coming out of both the physical metal and the mining equities. The silver lining that I like to remember is that, I guess we have to accept the situation the way that it is, but the fact that it's been beaten down so low offers such a huge runway for improvement that, if just a little improvement in terms of capital flows coming into the market from institutional and individual investors could have a major impact. But the waiting here is the torturous part, right?
I think it is a strong case. I've been through, I've been in the sector for over 30 years now, and there are times, if you're truly a contrarian, this is a perfect scenario. The mining equities, right, are
Mm-hmm.
the perfect scenario. But you need to have a contrarian mentality, right?
Yeah.
Yeah. If you
Yeah.
have a contrarian mentality, you will be comfortable. But certainly, investors in the precious metals mining equities have been put to the test, right?
Mm-hmm.
And you're right when you talk about thick skin. They are all, our investors are being put to the test.
Yeah.
Uh, and I think you need to have a strong convictions on your investment thesis and a bit of a contrarian view, right?
Yeah. 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 And most people let their emotions rule their investment decisions. And right now, anyone who's been invested in precious metals equities, the emotion associated with it is just a lot of pain, right? I mean, even me, I'm probably one of the most bullish, optimistic, uh, and I would like to think somewhat objective people when I look at the metals, and I have a big portfolio of precious metal mining stocks. And when I think about there's that silent part of me that says you should, buy a little more, but it's very difficult because I'm hearing everybody, even from the conference that you referenced, people were saying that some of the executives, the comments from some of these executives was like they're just like throwing their hands in the air and saying this has become, it's become so difficult with sentiment the way it is. You'd think at some point we're going to reach that capitulation stage where things could turn around. And I've also heard this: it can turn. You and I know because you've been in it longer than me, but when it turns, it can turn very quickly as well, and things can get better very quickly. And I think again, since we're starting from such a low base in terms of interest and sentiment and capital flows into both the physical metal from an individual and even institutional perspective and the equities, that it's not going to take a lot. It's easier to go from having an F grade to a C grade than it is to go from a B grade to an A grade.
I hear you perfectly loud and clear, and I'm 100% with you. Um, there is a lot of money out there, and that money is not looking at mining equities. The moment that happens, uh, the movement is going to be exponential because to begin with, there is not a lot of product for that money. No, how many really large precious metal producers are there today?
Yeah.
How many mid-sized producers are there today?
Mm-hmm.
Large producers, we can count them probably in two hands, and that's for the
Yeah.
world, right? Mid-sized producers probably in three hands. No, if you lend me one hand, we can count all of them. Uh, and probably I haven't done the exercise, but probably the market valuation of all the precious metals miners doesn't equate to.
I can tell you, I'll interrupt you. I read this just the other day. You know, Home Depot, the hardware store in the
Yeah.
United States, all of the precious metal mining stocks, if you combine all of their market caps together, is less than the market cap of Home Depot, the hardware store.
Yeah, 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 yeah. Yeah, absolutely. So, I mean, you see, when money flows into the sector, there's just so many companies you can invest in. No,
Mm-hmm. Yep.
that gives you a sense of the size of the sector.
Yep.
It's very small. It has shrunk dramatically, and today is very small. So any small inflow
Yep.
will drive it exponentially. Yeah.
And the other consequence of that, and you correct me if I'm wrong, is that because there's so little money coming into the sector, there's been a depressed level of exploration and development over the last 5, 10 years as well. So from a future pipeline of new projects coming on board, sure, there's some, but there's not like a massive amount of new projects coming in, from a supply perspective as well.
Yes. Now that is true, and but you know what? I have a bit of a different view with respect to gold and supply demand fundamentals. Uh, I have a bit of a different view because every gold that has ever been mined is sitting in a vault, and when prices go up, that gold starts coming out of the vault.
Mm-hmm.
The so I think that really the driver. So I believe what you're saying is right,
Mm-hmm.
but what it does impact is the size and the availability of producers. That's why I'm saying this is a sector that over the years it gets more and more concentrated in less product for the investor.
Yeah.
Investors don't have a lot of product.
Yeah.
If you want to invest in the seniors, who are the seniors? The seniors are Newmont, Barrick, Anglo, Agnico, Kinross.
Mm-hmm.
I might be missing right now
Yeah.
one,
No, no, you got
six,
it.
seven. Uh, and then you have the mid-sized producers. That those are, I will put Endeavor Mining in the seniors. 8. I'll give you 8. And then you go into the mid-sized producers. So as there is an absence of discovery, what happens is that these companies merge, or you don't see new ones emerging because there is no gold being discovered. So the amount of product available for the investor in the senior space in the precious metals industry is 8. And then if you
Mm-hmm.
go to the mid-sized producers, you probably see 12,
Mm-hmm.
15 companies. Mid-size being 500,000 ounces like us.
Yeah.
So so when money flows in, like you're saying, if the entire sector has a market cap of Home Depot, imagine if we get some serious money. And we saw that in 2008, 2003, 2005, 2009, 2010. I could go around the capitals of the world meeting with large institutions. I remember meeting in Austin, Texas, with the U.S. Army Pension Fund. I don't know how many trillions of dollars they managed, and they wanted to invest in mining.
Yeah.
Texas Teachers Pension Fund.
Mm-hmm.
I mean, just generalists who manage billions of dollars wanting to put money into mining equities.
Yeah.
That has disappeared. We don't see that anymore.
First Mining Gold is a development company advancing two of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, But exploration initiatives are underway at both projects to find even more gold. First Mining is well financed, has zero debt, and owns an interest in 4 additional Canadian gold development projects.
Correct me if I'm wrong, because you said something that was a new concept to me that I'd never thought of. Like, there's a difference, obviously, between all the gold that's in the vaults and the mining sector itself. And as the mining sector becomes smaller and smaller, it will act obviously even more independently from just the physical gold that's, like you said, every ounce of gold that's ever been mined is sitting somewhere in a vault. But this mining sector just continues to contract in size. And at that point, when there is new interest, that could result in some rather explosive capital flows, because the number's so small. When you get to a small number, it's easier to increase a small number by 2 or 3 or 4 times than it is starting from a huge number. Yeah,
Yes, and you don't get, as I said, dilution, right? Because there are
mm-hmm.
not how many large, you know, I mean, how many multi-billion-dollar portfolio managers are out there? You can measure
Yeah,
that not in hundreds, but in thousands, probably.
yeah. And
And
it's something. Go ahead, Jorge.
no, and and those guys, when they say, okay, I need to have 5% of my portfolio in gold and equities, uh, how many senior producers are there? 8.
Right. Yeah.
Okay, and if I put, then they'll inflate those rather quickly, and then they say, okay, what's the second tier of producers, the mid-size? Okay, how many are there? 14. And what's their market caps? Their market caps is $1 billion to $2 billion. And
Right.
I'm like, they're like, well, but I manage, 25 billion. If I put, 1% of the portfolio, no, is 250 million. So how do I invest in the sector, right?
Right. You can buy the whole thing. You can have it
Yeah,
all.
yeah.
The other thing I wanted to interject, that as you were speaking, another, something that dawned on me as you were speaking is, yes, there's only so many intermediate sized companies. There's only the 8 large ones, like you talked about. But there's a big moat around those companies. Just because more capital comes in at some point, you can't just out of nothing build a mid-tier gold and silver mining company. I mean, it's a decades long process at best. You know what I'm saying? Now, exploration companies, sure, they can pop up, but when you talk about mid-size and large companies, that you just can't, you can't make one up overnight.
No. So that directly to the point that you brought and led us to this conversation is there have been no discoveries. So if you're not making important discoveries, you cannot grow the pool of mining companies. You know what I mean?
Yeah, yeah,
Uh,
yeah.
so are those discoveries, the few discoveries out there end up being taken by the large producers, no?
Mm-hmm.
But you don't have a pipeline that lends to a diversified small universe of multiple mid-size and large producers. It's a small, concentrated world. If you want to take producers from 500,000 publicly traded companies, 500,000, 400,000 ounces and onward, you probably stop counting in 20, number 20.
Mm-hmm.
So, how can you invest if you're a large $1 trillion, $50 billion fund management firm with a mandate to put 5% on gold equities or gold and equities?
Yeah.
So that's what we're talking about, right? So I think the main impact of the absence of discoveries is not so much on the supply and demand fundamentals of gold per se, but more on the pipeline of discoveries to have a flourishing mining sector with multiple companies competing, growing. No, it's really a pool. I know all the CEOs. I know
Hmm.
all the guys. I know everybody, and it's just a very small gathering, really.
Right. Right. And it's taken you, a decade plus to grow Fortuna to the size that you've accomplished.
Almost 20 years.
Hmm.
Almost none more than a decade, 20 years. Because it's not only about making a discovery these days, it's the time it takes to permit. That's why I went to West Africa, because in West Africa, I can permit under 5 years. I can go
Right.
from resource to production in under 5 years.
Yeah.
In North America or other jurisdictions, that process takes 10 to 15 years, right?
Hmm. Hmm.